Hello and welcome to Finextra. I'm Emily Haller and I'm here with David Lawlor of Thomson Reuters, and we're talking about MiFID II and data aggregation. Thank you very much for joining me.
Pleasure.
Will MiFID II market data have a positive impact on European financial markets?
I believe so, because you're going to have a lot of market data in markets that were previously opaque, and people will be able to use that market data in functions across their institutions today. The examples of that was in the front office, where people will have pre-trade quotes and they can use that for order routing. On the post-trade side, they'll also be able to look at best executions to see which venues they should be executing their trade. The next way to use that data is probably in the back office function. With the back office function, they do end-of-day evaluations. In the past, they were doing that with indicative data. Now they have real trades to use that with. And the last one is the compliance arm of that as well. So firms will need to prove whether or not they fall under the systematic internaliser regime. What is a systematic internal regime? Well, that's where institutions trade in size on a frequent basis, and the only way to calculate that, whether or not you fall under that regime, is by looking at the total size of the market and evaluating where you are in that position.
How will vendors and partners like Thomson Reuters manage the data that exchanges will be obliged to provide?
I think that's a good question, because there's going to be a proliferation of venues out there. So, for example, on the non-equity side, you're going to have lots of MTFs and OTFs and APAs. 40 plus is what we've estimated. The good news for us as a vendor is that these are existing partners. So we already have comms lines, we already have commercial arrangements, we already have administration processes in place. So we believe our time to market will be enhanced because of that issue. And also there's a general sort of collaborative approach to this market, because our clients are their clients and they also need that market data to be delivered in a normalised and centralised way.
How do you see data service providers helping the market to reduce implementation costs and timelines?
Well, cost is fundamental for this site. So reducing cost has got to be at the forefront of all vendors that are providing data, because the institutions that have got to go through this, is because there's so many different activities they have to do in a year, they're going to have to go through an awful lot of cost themselves. So I think from Thomson Reuters' perspective, it's to try and enhance products that are already embedded within our clients. So for example, Electron, you'll be able to deliver real-time feeds, and so you'll be able to capture that data in one place. On the data scope side, which is reference data, again, we're going to be enhancing with the new fields that are required and just deliver that as normal to these clients. Tick data, for example, can go via the tick data product. And just in general, it's to try and enhance the products that you've got, deliver the data in a consumable way, and make sure that it's very easy and accessible for our clients.
David, thank you very much.
Thank you.
And thank you for watching.